Hello. Welcome back, everyone, to Alpha Beta Soup. I'm TXMC. Well, we will review the last couple of days of price action. I've got a couple of notes on what happened with Luna, and I also want to discuss people's expectations for this market and how I feel there are a lot of people still getting this wrong. We'll talk about all of that, so don't go anywhere. If you enjoy this content, please give my video a thumbs up and subscribe to the channel. I appreciate all of your support, and I'm glad you're here with me. But let's not waste any more time. We have a lot of things to talk about, so let's get right into it. Since the last time we spoke, Bitcoin has taken another plunge, this time down to around 25,000 and change. This was not a price level that anyone was expecting to see anytime soon, and I think this caught a lot of people off guard. Now, there are plenty of folks who've been calling for lower prices, thought we would go down and hit the realized price, which I'll show you guys in a few minutes, etc., etc. But needless to say, the quickness of this fall has caught most people by surprise. I don't think anyone expected that we would be at 40,000 just a week ago and be all the way down here at 25. And, we've got to be honest about it. A huge reason why this happened is because of what happened with Luna and their forced selling of Bitcoin to try to preserve the peg, which they were unable to do. Here's a look at that peg, now down to 11 cents. You can tell it is completely shattered and it's not coming back. And because of the way Luna and its corresponding stablecoin here are designed, as long as this remains below the peg, there is essentially an infinite supply of Luna that is being created as a result of this sell pressure. So at this point, Luna is not a buy. I see people talking about it being like a super discount right now, but those are people who don't fundamentally understand how this token works. And I'm telling you guys, the fact that it's at 0.0003 or whatever doesn't mean it can't go lower than that. Trading on Luna is mostly suspended at this point, but even yesterday, there were still people thinking that this was a buy. And if you threw $100 at it, it could turn to 1 penny in a matter of minutes because of the complete hyperinflation of their currency. And that is why it is so important for you to understand what you're investing your money in. Because there were a lot of people that got absolutely decimated by this Luna collapse. And what they don't understand is that Luna and UST functioned exactly as they were designed. Now, they may have been taken down by a very intelligent speculative attack on their ecosystem. I think they were brought down intentionally by someone shorting their token and causing this death spiral. We may find out the truth of that over the coming weeks and months. But the real bare bones truth of all of this is that the way Luna was designed, the burn mechanism between the UST and Luna tokens meant that this is precisely what it was going to do once there became imminent sell pressure. Now, I'm not someone who likes to say people get what they deserve, but I do believe that the primary way the market teaches people is through pain. I can come on here every day and give you guys advice or give you my perspectives as just one person who participates in this market, but we can't save everybody. And in a lot of cases, people have to learn the hard way. That's just the way the market is. It's a savage Darwinian beast, and it teaches through pain. And the vast majority of people who lost money in Luna over the past week never bothered to read the white paper. They didn't understand how the token mechanisms worked. They only understood how it functioned in a number go up market. They had no concept of what would happen to Luna or UST if someone shorted the hell out of it. And that's exactly what happened yesterday and the day before. A mastermind speculative attack destroyed the token, and it's essentially dead at this point. Maybe it recovers in the future, but it's hard for me to imagine that there is any confidence in Luna, the token, or in UST, the stablecoin, which is now at 11 cents. Money operates on trust and belief in its accepted value. And when you have a coin that is meant to preserve a value of $1 that is now worth 11 cents, that confidence is destroyed, and it will take an immense amount of effort to even conceive of building it back. But that is not a topic for this channel, and it's one I have very low confidence in. But if we're going to pivot back to Bitcoin, which is the focus of our channel and it's the primary asset we study here, it did get flushed all the way down below 26,000. And as of time of recording here on Friday morning, it's now trying to get its way back up to 31K. Not sure if it will. I have a suspicion that we may run out of steam somewhere in here, but that is yet to be seen. We're heading into the weekend. There will be lower liquidity. And after such an exhaustive week, both for crypto and equities, there's a chance that this low liquidity weekend is a quiet one for a change. Hopefully, we are rewarded with very little drama in the next couple of days so people can take time to catch their breath. In equal measure, I also think that limits upside potential at this point. I know there are a lot of traders out there, active traders who have lower time frame edge in the market, and you guys may see something that I'm not talking about here that gives you conviction that maybe we go up to 34K or 35K or whatever. But in truth, that isn't my bias or really what I focus on. I'm not too concerned with where price is going tomorrow or the next day, or even by the time I make another video. My main focus is trying to determine if I think that this is the low, if I think that there's more to come, bigger picture, and trying to position myself and inform you guys of my ideas about how I think the market plays out for the rest of the year and going into next year and beyond that. So to do that, I think it's better at this stage that we focus on higher time frames. So here we're going to look at Bitcoin on a monthly chart. And the last time we spoke, the low was up here and it has come all the way down to here. And when you look at high time frames here, each one of these candles represents a month of time. There's really not a lot of support down here below the current 2021 lows right here. It came in January when the year was just getting started. And when you go below this level, there's really not a lot of resistance all the way down to this area here, which is the 2017 all-time high around 19,000. Now that sounds like a scary number to some folks, but when you look at the price chart here and you consider the economic landscape, falling from the recent low of around 25,000 down another 6K isn't that much of a stretch. It's just the people who are convinced that Bitcoin's historical cycle patterns have some kind of indelible rules to them. Those are the people who believe that this can't happen. But going down here absolutely could occur, and there's still a very palpable likelihood that we revisit 20K at some point over the next couple of months. I don't know if it takes us days to get there, weeks to get there, but I would suspect that we are not quite done with this downturn yet. So when we look at this high time frame and we notice this support at 2021 and we see that we've got our true range here boxed out, we had a deviation in October and November and then we reclaimed the range. Now as we've come down and broken below it, the thing you'd really hope to see is a reclaim back up to this level. Now this is a monthly chart. This could take weeks to play out, but that's the movement you'd like to see. We wouldn't want to see a bunch of monthly candles dancing around down here because that would just portend a longer recovery. But instead, if we can make a deviation, get back up and find some support in this general area, that would set us up for a reasonable move back towards this area up here, which is essentially the median of the macro range. We've talked about this at length on our channel here. Now, I'm not getting ahead of myself. This isn't a forecast for price, but if you're trying to think about how to interpret price action, you go level to level on higher time frames, because really all we're doing is just ranging back and forth, back and forth. And, you know, we could just keep going on and doing this until the next bull run starts. We've got the macro range. We've got the deviation. We're here creating another deviation. The constructive move is to reclaim support and then expect a move towards the median of the range. That is price action 101, and it's the way that I'm trying to look at this here. But even if we were to get back up to this level, I don't think that that means that we're now on our way up to a bull run. Anyone who has been listening to me for any length of time understands my stance about this year, and I don't believe that all-time highs are in the cards for us until we navigate through this tightening schedule that the Federal Reserve and European central banks are undergoing. Because as long as we remain in this climate, things like Bitcoin and all of its higher risk children, and by that I mean the crypto space writ large, cannot expect to perform well because we are in a tightening schedule. Liquidity is drying up. The cost of capital is increasing. Basic living costs are skyrocketing, and people's appetite for risk is simply not there. I still see a lot of people on Twitter making comments comparing the current market to July 2021 or even to the 2017 bull market. And those are inherently deeply flawed, friends. That is not the way to interpret what we're doing here. When you've got someone like this gentleman here who runs Three Arrows Capital, one of the biggest funds in the space, agreeing that Tether FUD started the 2017 bull run and alluding to present Tether FUD, they are showing a fundamental misunderstanding of the economic landscape. And there are a lot of people out there like this on your Twitter feeds. Now, it behooves everyone participating in this market to think far more critically about the big picture and about the economic climate we are sitting in right now. In July of 2021, we were still debating whether inflation would be a problem. CPI was under 6%. The Fed had not mentioned quantitative tightening yet, and equities were still making new highs. Bitcoin had collapsed on some very idiosyncratic FUD related to the China banning of industrial mining and Elon rug pulling all of the moon boys who thought that he would be on the side of Bitcoin in perpetuity. Those two things happened in May, a month after the Coinbase IPO, and it led to a massive May candle, which you can see right here. But the rest of the market, equities, etc., were still rolling through the end of their bull runs and hadn't completely run out of steam. Now, some alts did die in this crash, but there was still capital rotating through the altcoin market, and we saw many assets continue to set new highs into the second half of the year. But it was during the second half of last year that the market really started to understand its economic outlook. It really started to understand the risks posed by inflation, the concerns with high debt levels, and that is when the Fed pivoted to a very hawkish outlook for the next year. That all happened right around here at the all-time high. And I believe that folks like Mr. Davies and others of his ilk who are making these kinds of comments about how all we need is a little spark and we're right back into a bull run. Those people are thinking about the market from a conditioned mindset of having existed in a decade-plus long secular bull market with easy liquidity and low capital costs. That is not the market anymore. And it won't be until we navigate through this tightening schedule and we begin to see actual material signs that the Fed will be forced to reverse its policy. That is what is going to turn the market around. And it will most likely be signaled by something breaking in the debt markets, not because the stock market falls to a certain price level. So I know I'm going on a bit of a soapbox here, but when we look at equities, guys, this candle right here on May 4th was the 50 basis point rate hike that the market knew was coming. And even though the market got precisely what it was told it was going to get, it still managed to absolutely puke. And that is because the market is not able to tolerate material rate hikes in the current environment. The Fed waited far too long to begin tightening, and now they are doing it into slowing growth. We already showed 1 quarter of slowing growth in Q1, and I'm telling you, friends, we are in the middle of one right now. So by the time we get to July, the beginning of July, chances are we will find out that we are in an official recession, because it takes 2 quarters of negative GDP growth to become an official technical recession. But just because it takes 6 months to play out to become official doesn't mean that it isn't a recession leading up to that announcement. And we are in that moment now. So anyone talking about how we are mere moments away from the next bull run, I feel are making vastly uneducated comments, and it is dangerous. That's the kind of thing that will get investors wrecked. I'm not here to tell you we're going to zero. I'm telling you we're not going to the moon. There is a huge gray area of potential outcomes between those two eventualities. And what we are most likely in store for is more of this. So yes, maybe there are some gains to be had in here. But then again, maybe we don't even go up to the top of the range. Maybe the best we can hope for is right here. This is the kind of nuance that we need to be discussing. And when people make comments comparing the current market to 2017, when we had just had major corporate tax cuts and capital was flowing freely, those comments come from a place that lacks economic nuance. So it's important to me as someone who has a platform that I express to you how much I disagree with this sentiment. Now, I would love to be wrong. If somehow the Fed reverses course, they realize something is going wrong and they have to revert to easing, then we may be able to talk more realistically about price upside. But until we get to that moment, downside is still very much in the cards because we have at least 1 or 2 more months of 50 basis point rate hikes coming, because that's what the Federal Reserve told us they are going to do, and they are not going to pull a surprise to the hawkish side. They've already expressed about as much hawkishness as they're capable of. So at this point, they are just staying the course until their chosen indicators begin to show them a different signal. And as we just explored, the last time we got a 50 basis point rate hike, which was last week, the market shit itself, and it was getting precisely what it knew was coming. So I want you to digest this, friends. Really take this to heart, that the crypto market that you have become accustomed to over the last year, 2 years, 5 years, whatever it is, where it has these steep drawdown bear markets that as soon as you get the liquidation wick, everything goes back up. That is not where we are right now. We are not simply waiting for a bunch of long liquidations to cascade us into a doom wick so that everybody can pile into Bitcoin and we can run to the moon. To kind of add to that sentiment, one of the reasons why we're probably not looking at a long liquidation cascade is because there are not a lot of leveraged longs in this market right now. The majority of open interest is held in short positions based solely on the movement of OI in relation to price action. So as we have continued to decline, OI has continued to rise, and it is now in nominal BTC terms at all-time highs. So as the market continues to tank, there are more and more derivatives traders opening short positions and expecting more pain. Now, some people are long, absolutely, but when you look at the funding rate and you see how negative it is, and you see OI continuing to rise as price is declining, and we see some people are getting liquidated to the long side. There are some in this market, but short liquidations are much more muted, and the OI just keeps climbing. If these were leveraged longs piling in, funding would look a little different from here. Even following the liquidation of a couple of days ago, which normally shoves it deeply negative, I believe, based on everything I'm looking at, we have a lot of shorts in this market. And what shorts are here are not using a lot of leverage, which limits the cascading ability to the upside. And we're really not positioned in the same way that we were last July, when we had a bunch of shorts overly exposed and they got caught on the wrong side and squeezed. And that helped bounce us out of the July lows. So anyone expecting that to happen, I believe, will be disappointed. Now, because price has fallen so far, there are certain on-chain metrics that are screaming that we may be near a value zone, some kind of buy zone. You may see them being thrown around on Twitter. And sure, if you're a long-term DCA artist, seeing MVRV all the way down here and creeping down towards 1.0, that's a value zone. I think that's undeniable. I mean, we're at 18-month lows right now. But as long as you use these metrics more as a confirmation of value rather than an expectation of an oscillation to the upside, then you'll be okay. Because I think a lot of people look at these metrics and they think, oh, well, when we get to this point, then that means the reversal is in and numbers going to go straight up from here. That's not how these metrics work. Now, Bitcoin has worked that way because of the environment I have been describing to you for the last several minutes, which is now shifting beneath us. And it's not realistic to expect that anything, even Bitcoin, is going to violently reverse just because we reach the bottom on some of our favorite metrics. So please keep that in mind when we're in these bearish climates, that as you see various metrics drifting down to the low ends of their values, that doesn't guarantee that a reversal is in. All it is confirming for you is that we are in a position of value, of relative value. Now, for us to get below an MVRV of 1 would mean that we would have to fall below the realized price. And the realized price is currently at $23,960. It's here in this orange line. For those of you who don't recall, the realized price is the average price of every coin on the network, the last price that all of them moved at. So it's like the cost basis of all holders. And in periods of intense bearishness, in every full bear market to date, we have eventually actually come down and met the realized price. The most recent event was in March of 2020. We also spent time below there in 2018, as you can see on the edge of my chart over here. And we are now moving towards the realized price. I'm not guaranteeing that we will go there, but if we do fall below it, that'll be a moment where you should consider your long-term thesis about Bitcoin. And if you have conviction in this asset, that is probably the most undervalued that it will be in this cycle, below the realized price. It's possible that level gets front run. There's certainly a chance we don't even get down to here. But if we do, if you see $24,000 or below Bitcoin, that is a sweet spot for DCAing and backing up the truck for most people that have long-term investment profiles for Bitcoin. So just something to have in your toolbox as we're looking at prices here in this absolute market shit show. So to wrap everything up, we do have negative funding, which shows that there is a bias to the short side in derivatives, and it is partly the result of the intense price flush we've had over the last couple of days, which did manage to liquidate some longs. But due to the nature and the makeup of these positions and the way we've been behaving over the last few months, leveraged longs are not in the majority here. And so I don't believe we're in one of those conditions where we can see a cascade to the downside that wipes out OI. I actually think a lot of these people are short by the way this continues to rise as price is falling. So derivatives still have a palpable short bent to them, and we'll keep an eye on this as we go forward here. As we talked about with equities, they tanked on completely expected news out of the Federal Reserve. So what we'll need to keep an eye on when we get into June is what happens around the FOMC there. It's June 14th and 15th of next month, and that is when we can expect most likely another 50 basis point rate hike. And if we got anything like we got this week, we're in for some more volatility. And as we explored on high time frames, Bitcoin did manage to deviate out of its macro range. And as it did in October and November, what we can hope for, though I'm not certain that we'll get it, is a reclaim of this structural support level before we drift back towards the median. But there's still more than 2 weeks left in May for this candle to close. And if for some reason we can't hold that range, I would expect at some point for us to dance down in this region here between 25 and 20. And what I'm doing on a personal level is making sure I have plenty of savings as always, but I'm also keeping a cash position on the side to deploy when Bitcoin falls below 25,000. That's my own personal plan because that price matches with where I perceive value with my investing. So I encourage you to come up with your own plan. Maybe that doesn't fit with what your priorities are, but now is the time to come up with a plan. When we're just sitting around here, price continues to get cheaper and cheaper. Make your plan, friends. Be prepared. Don't let the market catch you by surprise. So that's it. That was what I had on my mind today. I really wanted to take time and discuss what I'm seeing people talk about on Twitter and how I feel there is still a lot of fundamental misunderstanding about where this market currently is. And it's based on past experiences where people simply have not understood the macro backdrop to the secular crypto bull market that they have grown up in. And it is important as we go forward that we think more critically about the broader picture as Bitcoin and crypto grow, mature, and become legitimate global assets. It is no longer a viable strategy to ignore macroeconomics. We'll give the market a couple of days to play out, and hopefully we get a quiet weekend, everyone. After a week like this, I think a lot of participants are hoping for that, and maybe they will be rewarded. But it will be a low liquidity environment, so if there are price moves, they could be pretty swift, as that typically what occurs when you've got lower volumes. But we'll see. Make sure you follow me right here on Twitter at TXMC Trades. This is me. If you see other impersonators, please report them. This is the only place that I put out content other than the YouTube channel you're watching. If you have any feedback or requests for this channel, make sure to leave them in the comments to the video and I'll check them out. If you enjoyed this, I would love for you to subscribe and please give me a thumbs up. That really helps with the algos and pushes the success of this channel. I hope you have a great Friday. Make some relaxing plans for yourself this weekend. Ensure that you are building in time for yourself to unwind and to take care of your mental health. That's the way that we will survive this market together. And until next time, be kind to each other. Take care of your families, and we will chat very soon. Cheers, everyone.